Today we talk about kind of a pair of umbrella of objects called risk assessed moves. Risk assessed moves are all the things that we don't touch on in the course of mentorship. It's all the pieces that are kind of outside of a risk parameter that we're willing to take. So this is a large umbrella of different things: backside trends, reverse levels, where a level doesn't get quite touched but it moves up. Maybe we can start there on a nice easy one. We can find an example here. So typically in a move, we can, and you know where we can go back to here. So we're not going to worry about this. We'll do this piece after. There's always going to be these places where we expect a trade to go to, and it doesn't quite reach there before taking a move. So it covers a large range of trades that have never been taken to date, right? This covers a large range of, it never quite hit our level. For example, if we were to use this level right here, it never quite hit our level. If we go to an hourly, you'd mark this and yeah, okay, fine. It hits the hourly. That's fantastic. Everybody here is trained to go after these greedier moments because, well, quite simply, they work well and you don't really have any risk on them. Here's another one. This was, never really hit, but then, you could go to a 1 minute chart and, you could find the greediest level and say, okay, well, this was never really hit yet. So this is what we're trained to go after. This one, because this is tested in the moment and that's fine. And it goes there and that's great. And then this is tested, or no, this is not tested. So this is kind of where we'd expect it to go. And then this one is where we'd also expect it to go next. Right here, we're going to mark these ones yellow for this example, just because, we'll do green. That's good, green. Do green like this, do green like that. It's perfect. So they never really quite go after these. Actually, this one does, but then it goes kind of right through. Goes and targets something much different. And then, this green level, fine. We can move it to this point here and it never quite goes after this level, but it does go after this one right here, right? So it does go after this and then it goes after this one right here. So this one was a good level. This one was not a good level. This was a good level, but not under our criteria. So you kind of have this mixture of good and bad levels. And then this one would also be like this. And then this one would also be green here. So this one would be green as well. And we actually have to adjust this one. Also, we'd be told to go after this one here. And then possibly even this one here, and do any of these get touched? And none of them get touched. So this is kind of, 1, 2, 3, 4 trades never to be taken, right? But then they do exist on another time frame. So this is all a part of what's called the risk assessed trading. So when we go to a different time frame, we can use the hourly here, for example. We have the hourly here. This never gets touched, so we can actually just move that one back, and we can go to maybe a 4 hours or 4 hour. There's no 4 hour. Really, what we're trying to do right now is find this level that gets hit. There's no 2 hour, so maybe it's I think we just did the 1 hours or 15-minute level there, and there's a 15-minute level right here. Oh, actually, that doesn't even get touched. There's a backside level right here that doesn't get touched. There's nothing there. So there's this right here, and that kind of ladders down a deep dive. There's nothing there. Come on. So test the range on this one. I'm wondering if there's anything else here. Obviously, it's going to be the backside to a lower time frame. Touches it, deep dives it, possible base being created, right? So we can make sense out of this, but again, not a trade we would have taken because, hey, it didn't go after our criteria, right? So this is important to understand that there is a lot of trades that we have not looked at for this specific reason. So there's trades on, and so we did that one a little bit. Let's do another one here, like this piece over here. Yeah, okay, fine. So this goes and back tests something here. Let's just start with the hourly, see what it does. This goes and back tests the top of this, right? So it goes and back tests the top of this. That's fine. That's easy to see. And you would say, okay, well, here's kind of the deep dive point to that, making this possibly the base for the future. And then there would be some kind of other level in here. And we never really get entry there. So this is a scenario where you have to start using all your different information to give you the pieces of the trade that you're missing, the pieces that haven't been filled in for you. So in this moment here, for example, if you were right here and you said, okay, top of the range gets tested, Perfect. That makes a lot of sense. The top of this range on this time frame gets tested. There's no 4 hour here. There won't be a 4 hour there. The 4 hour would be down here. Maybe this gets tested next. I'm not sure. But anyways, the top of the 1 hour gets tested. The 1 hour greedy point gets tested. And let's just fast forward this. And it actually never gets back tested, right? So we can go back to that hourly chart here. Take this replayer, go to the test of the move, take this off this 4 hour. And this is a point where you'd have, you'd have your trend now developed like so, right? You'd have your trend developed like this, and more likely a 4 hour point there. Yeah, it's the 4 hour point. And then you would have also been able to adapt this out, right? So that you would have something that would be this point to this point. So for this, we're just simply going to mark the base of this move here to that there, which hard closes to here, which hard closes to here. So you kind of have these two different trends against what is stabilizing the move, right? We'll mark this. I don't know. We'll just do purple because it's a 15-minute. Actually, you know what? We'll go gray. We usually go with a gray for these lighter levels. So in this trade, you're going to see here, this level is stabilizing the move. So there is kind of a adaptive nature, a dynamic nature that you have to start applying on your charts and start using to understand if a move is holding. Because really the key piece of information here is that this move is indeed holding. This 4 hour trend is not broken yet. This 1 hour trend will not have been broken yet. But this hold level is stabilizing the move. So we can simply get rid of this to clean up our charts a bit to see where this is actually stabilizing the move. So in this trade, you wouldn't be looking to back target anything lower. You'd actually simply be looking to either buy this right here or this on the second touch if it can hold this move. So it starts to hold this move. You can rebuy that on the second or third time or whatever. And if you don't get filled there, because that's a little wonky. That one doesn't quite get filled. What you'd be doing is you'd be looking to enter the trade on this because it's already starting its ladder. So this is a part of risk assessing a move, right? And as it gets closer to breaking these trends, you're going to have a better opportunity to get into this trade because quite simply, it's just not going to ladder to that greediest point. So there's kind of two paths a trade will take. It'll either go after the greediest part of its move for an extreme knife catch, or it'll end up holding something like this. Now, this is one of the common scenarios where it ends up holding its hold level like this. As always, it'll hold a hold level until we move through that and we break whatever trend we are looking at, right? So we can go to maybe a 5-minute chart here and let this play for a minute and see if we get filled on our order. And that's kind of a perfect spot right there, actually, that 1 minute candle right there, which gets filled perfectly, right? So then this is showing you that on this trade here, you are establishing your base of the move, right? Or not the base of the move, but you're establishing the hold. I don't mean a base as in this is the base for the future. Well, actually it could be, but we don't know that yet. But you're establishing this hold level is the level being respected. So now you have to kind of move your expectation from what would have been. Oh no, we don't want to do that. We want to go back down here and find that 1 minute level. Now you have to adjust your expectation to what would have been this level here, right? Like we're gonna use. Sure, purple. Well, we'll do pink for this one. We'll do pink. This is our expected level. So this is the expected, the EV, the expected value we would get out of this trade. Well, that would be more like a profit cap. But anyways, this would be the expected target. So, you hit play and let this thing go down. Oops. Whoa. Well, we definitely didn't want to see that yet, but that's okay. So this would kind of be your expected level, right? This is where you'd want to set your long. This is where your long would be appropriate to buy. But then this happens, right? Then your move stabilizes against another hold level, right? So your new expected level or your new expected buy should be this. It should be this hold level that's holding this move up. And this becomes a polarity in the move. So no longer do you have this, no longer can this piece of the move hold it up. Maybe it can, but it's less likely because the range is already tested, right? This is already a tested range. It's already trying to test its ladder point. Sometimes it will go straight down to this level down here. Sometimes it will actually go straight down to that level and touch it. You get your perfect knife catch scenario, but we can't always buy the greediest level because the greediest level isn't guaranteed to hit all the time, right? The greediest levels are great and they're large injection points, but then things like this happen where a larger time frame that's stronger holds the move up, such as this, right? So then you have to move what you have expected for your purchase to say, okay, We've tested the top of the range, and that's fine. This is more just information. It's not important that it tests the top of the range first, and then this maybe is like a 5 minute backside, and then testing the front side. So this being the front side of the move, so that range is tested twice. You could possibly extrapolate that from this if that exists. It looks like a 5 minute backside, which it is. It's a 5 minute backside right there, right? So this looks like a 5 minute backside to me, and then it actually goes down to the hourly right here. So backside front side combination, which also would probably be a smaller time frame here. It's not the 5 minute there. This looks like a 15. No, it's actually just the hourly. That's fine. So there's nothing lower in time frames. So then again, your expected entry point would be here. However, this range is tested twice and it's holding. So you have to now set your polarity as the hold level. That is going to be the final entry on this move, because this hold level is established. It's moving up, and this is only actually $4 away, close to $5 actually, $4 and some odd cents. That looks like 75 cents, 4.75. Yeah, so it's only $4.75 away from this point to this point. So you have to move your expectation up in the move. So this is a part of assessing risk in a move, and a risk assessed move as to where you're using a more adaptive set of criteria to start entering trades. So fine, we enter here. That looks good. It's you're just going to let this kind of go by here, and you've got entry. So you've got entry on the trade, and now let's start to look at some other time frames, some other things. So it's 23:10. What's happening on the 4 hour here? 4 hours hard closing in that 5 minute period. The 4 hour just hard closed. Interesting, because it was 2300 is when that closed. So wow, that's starting to make a lot of sense. And the hourly is about to hard close that 4 hour. The 4 hour is already closing, but anyways, the hourly, the next hour, the candle should set the hard close up, or one of these. So now we are at 1 o'clock, 2300. The next candle is going to be what can set up that 4 hour hard close. It can confirm it. So the next candle should theoretically be a large move up, and it actually just stabilizes. Oh, did I get that wrong? 3 o'clock. Oh my God. Yeah, my times are off. I thought 1 o'clock. It's not. It's 3 o'clock. So then this one should be it, and that's what it is. So if the 3 o'clock candle opens and you've already hard closed that time frame, you've confirmed the ladder. So there's a confluence there, and this is adaptive charting, right? And then even I'm sure if you were to take this back, you would even break your smaller time frame as well. In the moment, you'd probably be laddering up against this. You'd have your next entry. If for some reason you miss this one, your next expected entry, and this was already hit, your next expected entry should be somewhere on this range, somewhere between this and this candle. So the price difference between 932 and 930. So that's fine. You can use whatever maybe there's a bigger valley here. Then there's a bigger move right there. So 932.35. You can use that, no problem. So this is all a part of risk assessing a move, and this end usually a lot of holding here, and probably just break its trend. No, it actually goes back down and gives a second entry there. That's fine. And then breaks its trend, right? So that's kind of that moment where it breaks its trend. It continues to hold its move. I don't think you're going to get entry much lower than this. At this point, your entry would be maybe here if you're lucky. I don't even think you're going to be able to get entry back on this trade. I don't think you're going to be able. Yeah, no, okay. So we're current actually. So that's kind of perfect, right? So this is all a part of, again, an umbrella of lessons where you have to be able to not just enter greedy hold levels, because while they're great, they're huge money makers for sure. But then there's an adaptive nature to our charts where these things are changing all the time. And it's like we always say, we can only see one step into the future, which is true. And with charting, you're always going to have some type of level that other people want to buy. Maybe there's some guy here. You can't stop people from saying, I want to buy 1,000 Bitcoin at this price. When really it should have went down here. And you've seen it where there's a 500, 1,000 Bitcoin wall, or there's a 200 Bitcoin wall, and it sits there and it gets, eaten up, and that's 200 Bitcoin gone, and then it just gets another 200 gets put back there. So maybe this is one person who wants to buy 2,000 Bitcoin here and just does it 10 times in a row until it just refuses to go down to this level. Or maybe it touches this level on another exchange. But on Binance, which we're using on this chart here, it ends up just holding this level, because you can't stop people from doing that. Not everybody knows the science this deeply, but the biggest players in the game do. So the move gets supported, right, where it's supposed to. So this is all a part of understanding that there's a developing criteria that happens on your charts, and it's this, it happens with trends, it happens with levels. So this is one example of risk assessed trading, right? And why I call it risk assessed trading is because you have to assess the risk of the move on the fly, because you're not simply using a criteria where you're sitting here and saying like this, oh, here's the 1 minute level. That's perfect. It should go to here. Technically, it should just go to the greediest point, which is right here. This is perfect. I mean, it went to this one back here. So why wouldn't it just go to the next one, to this one here, which then brings you to this one here, right? Like this, it brings you to this one here, which brings you to this one here. So why wouldn't it go after this? Well, it's not always going to. It's going to slip to this level like it doesn't even exist as soon as that hourly level that establishes this move is there, that this hourly right here. As soon as that's there, and that's what's holding the move, that's holding the range. Just like on this top side, right? Should you have gone here? Yeah, at a minimum. Should you have gone here? Probably. And should you have gone even deeper in this range? Yeah. But what did you do? Well, you went after this right here. You went after, I believe it's a 4 hour it went after. Yeah, it's a 4 hour. What did it do? It went after this part of the range, right? So this is uncontrollable variables that we simply can't, let's double check, make sure there's not another time frame. No 12 hour, no daily. This is an uncontrollable variable that ladders the move, right? We can't always buy the greediest levels. When they get hit, they get respected, sure. And so the theme has been go after the greediest level. If it doesn't get hit, there's no money to be lost. And if it does get hit, hey, you're going to make a ton of money because that level is going to get respected and it's going to launch the move, it happens here to the T and it happens, on these different places, and you make the maximum amount of profits. But that doesn't mean it's always going to do that infinitely, right? So, and this is part of what makes me such a good trader, is that my ability to assess things on the fly. I call it chart architecture. My ability to assess things on the fly is so strong because there's not much that slips by me after doing this for so long. There's not much that I miss on these charts. So it's part of, if there were a butterfly effect 2.0, or if there were something else that I were to ever do another day, it would be simply just assessing in the moment dynamic pieces of the move, right? So part of what makes, again, me such a good trader and me so strong as a trader is that, and how I don't miss things really is that I'm able to dynamically pick these things apart like that. So that's part of one of my secrets and how I'm so good. And you can see, as I explain the move here, I can kind of tell what's going on before it's happening. We're in a 1 hour chart here and I said, oh, this is a 5 minute backside right here. So I can instantly snap to that time frame. Again, it's just an experience thing. Just part of the way my brain works and how I can see this. And, I've been able to reverse engineer these things for quite some time. And, so when I see a candle that looks like this, I know, okay, this is X backside. So I can already kind of understand what's happening next. And then, when I say, oh, this is touching that, I can see this trend here. There's a 4 hour. And then I know on which hour candle it's going to break up, unless I make a math mistake when I thought it was 1 in the morning, but it was really 3, right? So this is all a part of, again, why I'm talking about this right now is it's a part of understanding the dynamics of the charts and how we have to assess moves differently based on risk. So we're going to do another one, but this time we're not going to do it with a hold level. Well, we will, but we'll do a conjunction of the hold level with a trend somewhere. So if we were to see a move down, maybe we can do this right here. Okay, so let's erase what we have, and we're going to say, first off, where's our target? Target is something like this, right? Okay, that's fine. Target's this. Maybe there's a 4 hour here. Yeah, even that might be nice. I don't think there's a daily on this one. There's not. And maybe there's a 12 on this one. Not really, but then there's something in between 4 and 6 maybe. Yeah, it's a 6 right here. So that's fine. Better than the 4 hour. It is the 6 hour. And you'll notice I'm using a different time frame. There's going to be an hourly higher, of course. So now you've got 2 levels that you could introduce here. Really doesn't matter which level you take because it never hits here anyway. So what we're going to do is we're just going to use this and say, okay, well, it should have went here, but it doesn't. Instead, it goes after, I think it was a backside 4 hour on this one. Greediest point on the 4 hour, right? Possibly this is a 30 minute as well. The 30 minute is there. So that's fine. That's not really there. So we're just going to leave it on the 4 hour. I don't think there's any other time frame that can be relevant here. There can't be. There can be smaller parts of the body of this that break down a 5 minute piece right here. but that really it's not what we go after. It's simply just the 4 hour. So this, anyways, again, this criteria is just to see where it was supposed to go, right? It was supposed to go here, somewhere up in this range. It stops here. So how do you assess this part of the move now? Okay, so fine, we were going to have a trend like so, and that's going to shortcut to here. I believe this would be a 12-hour. Nope, the 12 hours right here. So that's perfect. 12 hours right there. You can see that's representing the move pretty well. And then so you'd have, this should be the short right here. This should be the short. Let's make sure we understand that. That should be the short currently. And then the next short should be, yeah, I mean, this really should be it in the moment, 92.03. That should be the short of the moment. There's nothing there, nothing there. You could possibly get to 92.50 here. 9,300. You know, you could go back up to this range here. You could go to this 93.55 range right here. Whatever this is here, this piece of this range that this has been testing. So whatever this is, you could deep dive this to create the base off of what this is testing here. So this is testing, come on, the backside here. So it could go to something like 93, a little over that. So yeah, okay, it could go all the way up to 93.82. So that's some of the levels we're going to use. Okay, so let's just play this through. Go after your first target. Perfect. So you'd short there. So that short would be executed perfectly fine. Really, you'd want to be getting out of this trade if you see the range holding. Is that where we are currently in the move? Oh, this is a terrible one to use. Oh, so Jesus, that's a terrible one to use. What am I doing? Okay, we have to use a different part of the move. Well, at least we were right with this. That's fine. Okay, we have to use something else.